Welcome to the deep dive. We sift through the noise, pull out the gold for you. And today, well, we're diving into something pretty startling.
Oh, yeah.
This statistic. Year after year, over 90% of traders, they're net losers.
90%. It's huge, isn't it?
It really is. You think about the massive profit potential in the markets, but the vast majority actually lose money. Why? What's the secret, that tiny minority holds on to? The ones consistently building wealth.
That's the million-dollar question.
Right.
And it's exactly what we're digging into today with Mark Douglas's classic book, The Disciplined Trader, Developing Winning Attitudes.
Okay.
And look, this isn't just another strategy book. It's not about, chart patterns primarily. It's a deep dive into the psychology of it all.
Huh?
Self-discipline, personal transformation, especially in trading, which is such a unique beast.
Right. So our mission here, for you listening, is to really pull out the core insights. Why is trading success so hard to find, and how does it demand this completely different way of thinking, different from how we usually operate day to day?
Exactly. And what's amazing is that this understanding, it's not just for traders. It's key for mastering any kind of challenging, unstructured situation.
That's interesting.
Yeah, and Douglas points out something really surprising early on. Successful traders, they all say the consistency came after they learned self-discipline.
Author, not before.
After they figured out emotional control, how to shift their mindset, how to flow with the market, not fight it.
Yeah.
It wasn't innate. It was learned.
Learned. And he has this analogy, right, to show how these abstract things can be learned. The firewalking.
Oh, the firewalking seminar. Yeah, it's a fantastic illustration. People literally learning to walk on red-hot coals barefoot without getting burned.
Crazy.
It is. But the explanation isn't about, tough feet or anything physical. It's a thinking methodology.
A thinking methodology.
Yeah, a specific way their beliefs are structured differently, how they perceive the reality of the coals. It shows that something like self-discipline, which feels abstract, can actually be broken down, understood, and learned, just like walking on fire.
So it really makes you think, what's going on in our mental landscape? How does this apply, especially somewhere chaotic like the market?
Well, that's the perfect jump-off point, isn't it? What
Yeah.
makes trading so unconventional.
Yeah.
Douglas says it's completely different from our normal lives, our cultural upbringing.
How so?
Think about it. In society, our behavior is shaped by external forces, right? Parents, school, bosses, laws.
Rewards and punishments.
Exactly. There's an external structure telling us what to do, what not to do. We learn to fit in.
Makes sense. We're kind of wired for that. Rules, consequences.
But in trading, Douglas stresses this: complete freedom, total creative expression, and, crucially, no external structure holding you back.
Okay, so you have to make the rules.
You make your own rules, and then you need the discipline to actually follow them. It sounds like freedom, but it's the ultimate test of self-control.
So if you can't control the market, which you can't, what can you control then?
Yourself. That's the core message. Douglas is crystal clear. You cannot control the market. It has zero power over you. None. The only thing you control is yourself. Your decisions, your reactions. You have the power to basically give yourself money or give your money away to other traders. And it's those internal psychological factors, your mindset, that decide which way it goes, not the market itself.
That sounds like it could lead to some pretty tough realizations. Douglas talks about forced awareness. What's that about? The market forcing you to see things.
Yeah, it's a powerful concept. Eventually, the market will force you to confront your illusions, your beliefs about how things should work, what should happen. When those beliefs smash head-on into what the market is actually doing, it creates this, well, he calls it a painful forced awareness.
Painful because...
Because it shows you where your thinking is flawed, where your beliefs don't match reality. It's like the market is holding up a mirror, reflecting your internal limitations, your biases, your fears.
Wow. Okay. So societal conditioning, we bring all this baggage from normal life into this totally different arena. What's the most common way this conditioning trips traders up? How does it become a barrier?
Well, one really common one Douglas flags is the big trade mentality.
The big trade mentality.
Yeah. Beliefs that work okay in society, like big effort equals big reward, or small wins aren't really worthwhile. They become serious psychological barriers in trading.
How so?
This conditioning leads to a real lack of self-control, a lack of self-trust in the moment. You see traders, for example, refusing to take a decent profit, maybe $500, $750, because it feels...
Insulting.
Yeah, insulting. Or just not enough compared to the huge win they're imagining. They hold out for the grand slam, and then, poof, They lose it all because they wouldn't bank the smaller real profit that was right there.
It sounds like it's tied into something deeper than just wanting more money, like
Hmm.
maybe feeling they don't deserve the easy win or needing that big validation. What about fear? How does fear play into this?
Fear is massive, absolutely massive. Fear literally limits what you can perceive.
Limits perception.
Yes, it narrows your focus. You
Hmm.
start only seeing information that confirms your fear, and you systematically ignore or miss opportunities right in front of you. And that fear breeds self-doubt, anxiety, confusion, feeling inadequate. It basically paralyzes your ability to think clearly or act decisively.
Okay, so we've got this conditioning, we've got fear messing with our heads. What are the specific common mistakes traders make because of this? Like, why is it so hard to just cut a losing trade?
Well, you see these patterns again and again. Refusing to define a loss beforehand.
Right.
Not getting out of a losing trade even when it's clearly going wrong. Getting totally locked into an opinion, I'm right, the market's wrong.
The classic.
Exactly. And what's key here is these aren't just technical errors, they're symptoms. Symptoms of those deeper psychological barriers, the fear of being wrong, the fear of loss. Traders often avoid setting clear rules. They avoid taking responsibility. They kind of prefer to keep their relationship with the market fuzzy, mysterious.
Mysterious. It's a great way to put it. Why do we like that fuzziness? Is it just avoiding blame? Shifting responsibility?
That's a huge part of it. Exactly. It avoids accountability. And this avoidance, it encourages a kind of herd mentality.
Following the crowd.
Yeah, looking to others, assuming they know something you don't. It can even lead to, weird superstitions. Douglas tells this story about a penny in a urinal on the trading floor.
Wait, what? Bammy.
Yeah. Traders genuinely believed it was bad luck and would avoid that specific urinal. It sounds crazy, but it shows how desperate people can be to find any external reason, any way to shift responsibility away from themselves. Because facing a loss, really owning it, that can be incredibly painful psychologically.
So if you don't define your own rules, if you don't understand the market conditions because you're looking elsewhere, you're just gambling.
Yeah.
Essentially, it sounds like you'd fall into random winning and random losing, as Douglas puts it.
That's precisely it. Random wins, random losses.
What does that do to you emotionally, that lack of control?
Oh, the emotional toll is huge. Intense anxiety, frustration, confusion, fear. Because you can't guarantee the next win, and you have no idea how to prevent the next loss. It's like being thrown around by waves you can't predict or control. And you can't learn effectively because there's no consistent pattern in your behavior to analyze and improve.
Okay, so the market isn't controllable. Our psychology is the problem. It really sounds like the market just becomes this giant mirror reflecting our inner state. What does Douglas mean when he says the market is always right? That sounds kind of fatalistic.
It's not fatalistic, it's objective. The current price, it just reflects the collective belief, the consensus about value among everyone participating at that moment.
Okay.
If the price moves against your trade, the collective market mind is right about the current value, and you are losing money based on that consensus. Your personal belief, your hope, your expectation, it means nothing unless you're trading huge size, enough to actually move the market yourself.
Which most people aren't.
Exactly. The market isn't judging you, it's just showing you the current collective reality.
And prices are always moving, right? Perpetual motion.
Yeah.
Creating endless opportunities. But here's something you mentioned earlier that stuck with me. Douglas says exiting trades is harder than entering them. Why? What's going on there?
Ah, yes. Because exiting forces you to confront really deep-seated stuff. Beliefs about greed, about loss, about failure. Getting in is often easier, driven by hope or a signal. Getting out, that means dealing with the possibility of leaving money on the table, greed, or crystallizing a loss failure.
Right. That confrontation.
And this struggle often leads to what Douglas calls the revenge factor.
Revenge trading, like trying to get back at the market.
Exactly. You start blaming the market for your losses. You see it as an adversary, something you need to beat, something you need to get even with.
Which is pointless given what you said about the market just reflecting consensus.
Totally pointless. And ultimately, you just end up punishing yourself. You miss future opportunities because you're stuck fighting battles over past losses.
Okay, so the market is a mirror. Our inner state dictates the experience. How can we use that mirror constructively? Like today, even if you're not a trader, how do you spot limiting beliefs using this idea?
Well, Douglas puts it starkly. You create the game in your own mind based on your beliefs, intents, perceptions, and rules. What you experience out there is shaped in here.
Inside out.
Inside out, not the other way around. Think about that amazing example he gives the guy on Michigan Avenue handing out free money.
Right, with stacks of cash.
Literally offering free money. And
Yeah.
most people just walk by. They couldn't process it.
Yeah.
Their existing beliefs about money isn't free, it must be a scam, literally prevented them from seeing the reality of the situation. Their internal framework blocked it.
That's incredible. It just highlights how much we probably miss, just because our brain has already decided what's possible or real.
Exactly right. Our beliefs, they act like filters. Douglas calls them closed-loop systems. They define reality for us, making it seem obvious, self-evident, and they block out information that contradicts them.
Why? Why block info?
It's a survival mechanism, really, to prevent sensory overload. Like a TV tuner locking onto one channel, filtering out all the others.
Yeah.
But the key insight is realizing that what you think is objective reality is often just your filtered version. So to grow, especially in something like trading, you have to consciously seek out and allow in the information that challenges your filters.
And this loops right back to fear creating what you avoid, the dog biting example he uses.
Yes, powerful example. A child gets badly bitten by a dog. Understandably, they associate all dogs with that pain, that threat.
Makes sense.
Their fear narrows their focus. They start perceiving every dog as dangerous, even friendly ones. They actively create terrifying experiences because that's all their fear allows them to see.
I can totally see how that happens. You have one bad experience and suddenly that whole category feels unsafe, even when it isn't. Is that the kind of blind spot we need to tackle in trading?
Precisely that. In trading, the fear of losing makes you cut winners short, right? You grab profit too soon. The fear of being wrong makes you ignore market signals that contradict your position.
Ah, okay.
You develop these dangerous blind spots where you literally cannot see good opportunities or you can't see the danger signals because your fear is steering your attention away from them. It's about recognizing how these internal states actively shape your external experience.
You know, self-discipline, it feels like something you're born with, doesn't it? Like a personality trait. You either have it or you don't. But Douglas really challenges that idea. How does he redefine self-discipline?
Yeah, that's a cornerstone of the book. And the path to becoming disciplined starts, according to Douglas, with radical responsibility. Meaning you and only you are completely responsible for your results. Whatever
Right.
you end up with, it's on you. Accepting that fully is step one. It's what opens the door to learning.
Okay.
And then comes the big insight. Self-discipline isn't a trait. It's not something fixed. It's a specific thought methodology, a mental technique.
A technique, like something you practice.
Exactly. It's about willfully choosing to behave in a way that's outside the boundaries of an ingrained belief or habit, specifically to achieve a desired goal. It's not about brute force willpower. It's about consciously directing your mental energy.
That changes everything. So if it's a technique, where do we start? What's the absolute foundational skill for a disciplined trader, according to Douglas?
Dealing with losses. That's the bedrock.
Okay.
Two simple but crucial rules. Rule one, predefine your risk on every single trade. Know exactly what price, what market action tells you this trade isn't working anymore. Decide that before you get in.
Before you even click the button. And rule two.
Rule two, execute the exit immediately when that predefined point is hit. Cut the loss. No hesitation, no second guessing, no hoping.
Oof. That sounds incredibly hard. Given everything we said about fear, ego, not wanting to be wrong, how do you build that trust in yourself to just cut it instantly?
It is hard, no question, but it's vital. Douglas argues that once you truly, deeply trust yourself, to always cut your losses at the predefined point, something amazing happens.
What?
Your perception actually widens. You start seeing more opportunities because you're no longer subconsciously paralyzed by the fear of an undefined, potentially catastrophic loss. You free up mental bandwidth.
Oh, okay.
You eventually get to a point where you just let the market define it for you. The trade hits your stop, you're out. Next. This self-trust is critical because, as Douglas says, fear is really the only thing that keeps us from learning anything new. It blocks growth.
Okay, managing losses is foundational, but then there's thinking in probabilities, getting detached, objective, not trying to predict, but identifying. What was it? The group most likely to move the market.
Yes, identifying the group, demonstrating the greatest potential to move the price, and then aligning your trade with that group.
How do you even begin to cultivate that kind of objectivity, that detachment?
It comes from observation, from understanding market behavior patterns, not from emotional attachment to your own predictions. You watch how the collective behaves at key levels, highs and lows, for instance. Or, like the pros do, anticipate when the general public is likely to pile into a trend, often right before it reverses. It's not about being psychic, it's about recognizing probable patterns of collective human behavior in the market context. It's probabilistic, not predictive.
This really drills down into how our minds work. Douglas talks about experiences being stored as charged energy, positive or negative.
Mm-hmm. Positively charged energy is expansive. It encourages learning, confidence. Negatively charged energy is limiting. It generates fear, creates those mental blocks we talked about.
So what does this charged energy mean for our thoughts day to day?
It means every experience leaves an imprint, an energetic residue. And that residue influences how you perceive and react to similar situations in the future. But here's the empowering part. You can manage this energy. Douglas explains that our thoughts actually have the power to change, reorganize, add to, subtract from, or even change the polarity, positive to negative, or vice versa, of anything stored in our mental environment.
So we can actively change those charges.
Yes, the keys are willingness and purpose. Consciously directing your thoughts. He makes the point that painful memories don't just fade with time. They stick around as charged energy until you actively work to decharge or drain them.
Decharge them. How?
By understanding them, reframing them, extracting the learning. This process allows you to see more options, more choices, beyond the limitations imposed by those old fears.
Which ties into redefining mistakes, right? Society teaches us mistakes are bad, linked to pain, embarrassment.
Exactly. And that hinders learning massively. Douglas argues, a mistake isn't resolved until we evolve in our understanding to the point where we can garner the insight that is available from the experience.
So it's not about avoiding mistakes, but about mining them for wisdom.
Precisely. It's not about blame or pain. It's about extracting the lesson so you don't repeat the pattern. If you don't get the insight, that negative energy just stays there, waiting to trip you up again.
Okay, this is all profoundly helpful for understanding the psychology. What about practical tools? Does Douglas offer specific techniques people can use to start making these changes?
He does. Several practical techniques. One is called the I am exercise.
Okay.
You basically write down a series of I am statements to uncover conflicting beliefs. Like you might write, I am a confident trader, but then also uncover, I am afraid of losing, or I am perhaps undeserving of success. It brings conflicts to the surface.
Interesting.
Asking specific probing questions. Questions designed to uncover limiting beliefs around things like guilt, competition, what it means to lose, what it means to be wrong. Really digging into those assumptions.
I like that. Using questions to get underneath the surface beliefs. He also mentions writing.
Yes. Writing is highlighted as a really powerful tool. The act of writing helps focus your thinking, clarifies things, and actively works to reshape that mental landscape you have. It's a way of consciously directing that mental energy we talked about.
Makes sense. And there's a specific self-discipline exercise too, right? Starting small.
Yes, he suggests picking a low-stakes task, something you dislike or resist doing. Set a rigid schedule for it, maybe just 5 minutes a day. And crucially, monitor your thoughts while you do it. Notice the resistance, the excuses, the desire to quit.
What's the point of that? Just forcing yourself.
The point isn't the task itself. It's training your mind to stay positively focused on a conscious goal despite internal resistance. You're building a mental resource, like a muscle, for following through on your intentions.
Ah, building the muscle.
Exactly. And he stresses, have no expectations of perfection at first, accept tiny steps. It's about the process of building that focus and follow through. He also mentions things like self-hypnosis and affirmations as complementary tools, ways to reinforce new beliefs and help dissolve old, unhelpful ones.
Okay, so let's pull this all together, this deep dive into the disciplined trader. It really seems the core message is that becoming successful, particularly in trading, but maybe anywhere challenging, it's fundamentally about self-mastery.
Absolutely. Inner transformation. It's not just about knowing market stuff. It's about knowing yourself.
And taking that radical responsibility. You are 100% responsible for your experience, your results. The market doesn't owe you a thing.
Not a thing. It's just a mirror reflecting what's going on inside you.
And Douglas leaves us with a really provocative final thought, doesn't he, about self-valuation?
He does. It's powerful. He basically says your training results are direct feedback on how much you like yourself in any given moment.
Wow.
It directly corresponds to your degree of self-valuation. So if you want to give yourself more profit, more success, more abundance in any area, you need to look inside and identify and change anything in your mental environment that doesn't support the highest possible degree of self-valuation.
So the final question for you listening is this. If those feelings, frustration, anxiety, disappointment, fear, if they're signals, direct messages that there's something important for you to learn about yourself, what uncomfortable feeling might you be pushing away or ignoring right now? What feeling, if you faced it, could unlock your next big leap?